It was the year 2008. The world's financial system was about to collapse, and almost nobody saw it coming. Banks that seemed untouchable fell overnight. People lost their homes, their jobs, their savings, everything. But what if I told you this collapse didn't start with chaos? It started with a dream almost everyone believed in, the dream of owning a home. After the dot-com crash in 2001, the US economy was hurting. To keep it alive, the government did something simple. It lowered interest rates. Suddenly money was cheap, loans were everywhere, and people thought, why rent when I can own? The housing market exploded. Everyone wanted a piece of the American dream. Families bought houses they couldn't afford, and banks were more than happy to lend them the money. Because for banks, the more they lent, the more they earned. But soon banks ran out of good borrowers, people with solid credit. So they started giving loans to anyone. No job, no income, no problem. These were called subprime mortgages. They were risky, unstable, and built on the hope that home prices would keep rising forever. To make things worse, these mortgages had adjustable rates, meaning the monthly payments would rise later on. And when they did, millions would realize they'd been living on borrowed time. But this wasn't just about families and houses. Wall Street was watching too. Banks and financial firms saw a gold mine. They took thousands of these risky loans, bundled them together, and turned them into something new, mortgage-backed securities. On paper, they looked safe. Because hey, even if a few people default, most will still pay, right? Rating agencies like Moody's and S&P agreed. They stamped these bundles with AAA ratings, the same safety rating as US government bonds. Investors around the world poured billions into them, believing they were safe, stable, and unstoppable. The whole system became a giant pyramid, built on loans that should never have existed. Banks were making record profits, executives were cashing record bonuses, and ordinary people thought they were building wealth. But nobody stopped to ask the one question that mattered. What happens when people can't pay? By 2006, the bubble had reached its breaking point. Home prices stopped rising. People who bought houses they couldn't afford began to default. And as the default spread, the whole illusion started to crack. The mortgage-backed securities, once seen as untouchable, were now losing value every day. Banks didn't know how much they were worth anymore. And worse, nobody trusted anyone else. In 2008, the unthinkable happened. Lehman Brothers, a 158-year-old investment bank, went bankrupt. It was like watching a skyscraper crumble in slow motion. AIG, one of the biggest insurance companies in the world, was next. And just like that, panic spread across the globe. Credit froze. Markets collapsed. The system that powered the modern world stopped working. People couldn't borrow. Businesses couldn't pay. And governments, terrified of total collapse, had to step in. The US launched a $700 billion bailout to keep banks alive. The Federal Reserve printed trillions to pump life back into the economy. It worked, but not for everyone. While the banks were saved, millions of people weren't. Families were evicted. Savings disappeared. Entire lives were erased by decisions made in boardrooms. The crisis didn't just destroy wealth, it destroyed trust. People began to question everything. How could so many experts be wrong? How could a handful of bankers nearly collapse the entire world? The truth was simple: greed. Every part of the system was chasing short-term profit, from the lenders handing out bad loans, to the investors buying toxic assets, to the regulators who looked the other way. 15 years later, we're still living with its shadow. The same low interest rates that saved the system also created new bubbles. In tech, in stocks, in housing again. The rich got richer, the poor got poorer, and the cycle of boom and bust continued, just with new names and new players. The 2008 crisis wasn't just about money, it was a warning about what happens when greed outgrows reason. When systems built on trust forget the people they serve. When the dream of success becomes an addiction. Because at its core, the economy isn't just numbers on a screen. It's the story of how humans behave when they think the music will never stop. And in 2008, the music stopped. Every financial crisis has a lesson hidden inside it. But the tragedy of history is that we rarely learn it. The world rebuilt itself, yes, But the same habits, the same arrogance, the same greed remain. Maybe the next collapse won't come from housing or banks. Maybe it'll come from something new, AI, crypto, or even debt itself. But one truth never changes. When something seems too good to be true, it usually is.